Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your youthful Utahn of a host, Tyler Otto, and I'm joined by the wise old Wisconsinite, Jeremy Van Grohl, sporting the company logo today. You look great.
Oh, yes. Had some auditor meetings today, so make sure it look nice. All the things. But wait, did you say Utah, Ian? Aren't you guys Utes?
Well, Utes is the school mascot, and then it's also a tribe from here, which partners up with you know how some tribes have gotten canceled as team names? Instead, the tribes out here, they actually perform at our halftimes, do education, so it's a good partnership. But we are Utahns, or if you're less politically correct, actually, I'm not going to get us canceled. I'm not going to use the less politically correct one.
Yeah, let's not change what works for us. Hey, I heard you guys are getting a professional sports team finally there.
Well, I mean, we've had the Jazz, but yes, we are finally getting a second one. We're getting a hockey team. We stole it from Arizona, who they don't even have ice anyways. I don't know what they were doing with their hockey team, so it's okay.
Yeah, I can't wait till they name it. Be the Utah Mormons on ice.
Oh, there's been some good ones, though, but the Stormin' Mormons have been the favorite one I've heard so far.
Oh, yeah, that would be ideal.
There's been lots of below-the-belt punches at Utah for team names, and I'm quite excited with what's out there.
I love it. Hey, can we dive into some news thing? And one specifically related to podcasts. Here's the question. You own an accounting firm.
I do.
Should you or should you not start a podcast?
I should not.
I saw this article through Accounting Today, and they said, maybe think twice before you start a podcast with your accounting firm. You must carefully consider the significant time commitment, need for a clear content strategy, and the challenges in measuring success to see if it aligns with your goals. So, but the
joke's on them. You have to have goals.
Oh, yeah, that's right. If you don't have goals, we're good. But I love this. The one thing that stuck out on this, the top 1% of podcasts have 21 or more episodes. If you're in the 21 episode mark, you're the top 1%.
Wow.
What is this, 23? 22 for us?
Well, yeah, I think this is episode 23. And by the way, I wasn't sure we'd make it past 6. So this is welcome news to me.
Yeah, and I feel like first time I've been in the top 1% of anything that's positive, right?
Whatever, you're $1 million firm. You're in the top 1% of businesses ever made. You're a big deal of it. I'm noticing now as I open up your article link, though, this was written by Uncle Blake, Earmark Podcast. This is Blake Oliver telling everyone to rethink. Is it interesting to note that this is after we signed on with Earmark, and then he comes out with an article, maybe don't start a podcast?
It is interesting timing. I will say that. So, crazy.
But we do have Uncle David saying that we are surprisingly listenable. So, Yeah,
that is true.
Well, I'm extremely happy because, yes, we're going to put this now. We're in the top 1% of all-time podcasts, according to Blake Oliver, right? We can take those words out of his mouth.
Right. How do we best leverage this information? We're going to have to ponder that.
Here's the thing. I think a good podcast, you always have to find your niche, and mediocrity is really where we found ours, and we're really owning it.
Oh, yeah. We're going to own that space for a long time.
Jeremy, in actual news, I don't know if you saw this, but the FTC came out and announced that a common employment practice is illegal. Do you know what this is?
I did. This is the non-compete thing, right?
You are correct. Yes. They came out saying that non-competes, like the traditional employment agreement tool that says you can't compete with us in this industry, go take a job anywhere else that competes with us for 2 years, are illegal, which, hey, kind of exciting because I think you and I have all worked in industries where they had this, but also kind of terrifying for a lot of firm owners probably because you don't want your staff leaving and becoming your direct competitor. Have you looked into this at all?
I really haven't, and I feel like this would have been super welcome to news when we were both W-2 employees, but now that we are the employer, I'm a little nervous, so I would love to hear whatever you glean from this information.
Well, first of all, let's talk about what this article is both, or what this law is going after, this ruling, and what it's not. So it is those employment practices that would basically say, hey, you can't go work for anywhere else in this industry or anywhere else in a geographic location for 2 years. That's what it's trying to stop, except for like high level executives making, I really should have my numbers straight, but it's like 150,000. It's not like some low number like 20,000.
Yeah.
But if you make over a certain amount, you're exempt from this. But really what it's trying to protect is just the employee, that they don't get shut out of growing in their career or held hostage in bad situations. Now, here's what I read into this, because as a business owner, I have a non-compete in my agreement for all my employees, but it's not necessarily one of these non-competes. And so there are actual tools out there that they recommend you can still leverage, which really is what my non-compete is going after. And so one of the ones that you can use as an alternative is the, first of all, trade secrets. Like, you can protect your proprietary information, tools, resources. None of your staff can leverage any of your tools or resources as they leave, and you can enforce that. The other one, which is the biggest one I try to enforce in my contracts, is a non-solicitation. Now, Jeremy, I know you made your way through college soliciting, but that was for something else. This is no solicitation of existing clients of our firm. So my staff can't, say we charge a client, $1,500 a month to do the bookkeeping. My staff member says, "Hey, client, I'll just charge you $1,000 a month to do the bookkeeping, and we'll cut Tyler out. You say 500, I make more, and Tyler loses out." They can't go do one of those, cut out the middleman, which I know I just told my staff on air I'm a middleman now. That's awful. But it's, a great little tool that's there. So if you can change around your employee agreements to cover both those facets, you're still in a good spot.
Yeah, I mean, you may be called yourself a middleman, but I believe you called me a gigolo. So,
are either of these incorrect?
Ooh, we'll leave that up to the listener's wild imagination. Let me start off by saying, first of all, I am fully behind this, right? Yeah. We want people to be able to grow in careers and develop as they should be. And if you, as the employer, want to retain people, you need to have them engaged, know what they want to do going forward, and have a plan for them in order to retain them and grow, right? Here's my question, though. So, I have something where I don't want my clients to steal my employees. So I have something in there you have to pay me this ridiculous number if you're going to steal my employee and they're going to work for you. Does that get outlawed by this, or is that okay yet?
So really, everything I've read about this, it's between the employee and the employer contract. So I don't think this has any impact on client relations contracts that you sign. So if they come and poach your staff, I think that is enforceable, and that's a non-solicitation. They can't solicit your staff to come work for them. At the same time, if they post a job opening, one of your staff members sees it and leaves, I don't think you can enforce anything there, as long as you can't prove that they solicited your staff and said, "Hey, we've got a job, you really should come," and try to entice them. So can you basically say, if my staff member leaves and works for you on their own free will, could you enforce that? I don't know. This is where you should talk to much smarter people than me.
And this is I just really have it in there to scare them, right? And just hopefully they're reading the fine print and saying "Oh yeah, I can't do that." But I also feel if I had a team member and they were passionate and the client wanted to hire them on, right? I'm not here to hold anyone back from some things that they want to do. So I feel I would find a way to support that at minimal, if no cost to the client. I use this with people talking about infidelity, that if I'm not what you want, right, then you should go find something else. You always got to make sure that you are the number one pick in both employment and in love.
You really just took this in an awkward direction. But I will say, you and I are not the firms that normally would hold our staff to those sort of commitments and try and get them into lifetime indentured servitude. But how many articles do we read of that's what people get stuck in? So I'm right there with you. Great ruling, and very excited about that.
Yeah, same.
Jeremy, jumping into our first game this week, and we're playing one of my old favorites, Updates and Updog. And Ian, can you play that drop from episode 7? Today, I want to start with a game that's called Updates and Updog.
Wait, Updog? What's Updog?
Not much. What's up with you, man?
Oh, boo.
Right into it.
Oh, God.
I love it.
Oh, I love it. Love
Jeremy,
it.
we have some fun new updates to different softwares, tools, resources in the industry. I want to see how in the know you are. So we're going to run you through 5 or 6 questions here and see how well you do. Are you ready, sir?
All right, hit me.
Question 1, LiveFlow, which, by the way, side tangent, LiveFlow sponsored our last episode. So everyone, if you're looking for a good little reporting tool, go click that link on our website because that helps us and tells sponsors we're worth their time. It pays for Ian. And if nothing else, you should pay for Ian's time. Back to this question. LiveFlow, they are now integrating with what powerhouse spreadsheet platform?
I would have to venture and say Excel.
The granddaddy of them all, 1987, second greatest production besides me. Microsoft Excel is now their new frontier. They were building their entire business coming off of Google Sheets, right? Integrating with Google Sheets, making it easy. And I'll freely admit, as Team Microsoft Excel, Google Sheets got collaboration right. Microsoft Excel did not. But
Yeah.
Microsoft Excel is still much more powerful. And I think the bigger firms have been clamoring for a direct integration. And as of this month, they have released it. So they had webinars this past week about introducing it, how to utilize it. And it's kind of a big bet for their company. But I could see this now getting them from the boutique firms into the door with some of the bigger firms now. I don't know, your take.
Yeah, I would agree. Like any time that you can use a tool that's universally accepted like Excel and make it easy to pull that information out. I think, I don't know if I've said this in here before, but I think we've talked about it. Like I helped a public firm acquire another firm and we could have all the data points in there, but you can't be flexible enough with that data to answer all the questions that the CFO wants.
Mm-hmm.
So I'm always downloading the data, putting it into Excel, doing trends, graphs, all the things to answer the right questions. And so, yeah, I think this is a huge win. Also, if you're listening to this, we're going to put on our Facebook page a poll, the greatest thing to come out in 1987. It's going to be Tyler or Excel. And if there's anything cool that came out in 1987 and as well, we're going to add that in there too and see if Tyler can back that up.
You know what else came out in 1987?
What?
The Princess Bride.
He didn't fall? Inconceivable. You keep using the word. I do not think it means what you think it means.
Ooh, yeah, that's going to be on there too. So, yeah, watch out for that poll because I'm going to love to see how Tyler's going to fare against
I'm
these.
getting last place. I know it. All right. Question 2. Relay, one of my favorite banks and, business crushes. They just announced what new product that many a client has been eagerly anticipating releasing in the next month.
Oh, they already got bill pay. Maybe a credit card?
Well done. Releasing
Really?
credit card platform, which, all things I hear, it's all speculation by me and things I've picked up just hearing things on the side, but we've used Divvy or now Bill Spend and Expense, Ramp, Brex, all these different tools. It sounds like now if you're a Relay customer for banking, you are now going to have the opportunity to manage all your spend in one spot, which I think is going to be just a welcome reception to most of their clients, especially because they just got receipt capture already in there. In theory, you're getting a lot of your cash management and document retention all in one spot. This could be huge for a lot of clients, and they're offering up to 1.5% cash back. Certain terms and conditions apply, which the fine print kind of ticked me off a little bit, but still exciting that you can manage this all in one place.
Yeah, that would be cool, right? Because the less tools you can have, both for your clients to use and you get specialized in it and to train all of your staff on the tools, right? That is definitely welcomed. Do you know if could it be standalone? I know this is all hearsay at this point, but I'm curious, like, could you do without a bank account? Could you just do the credit card platform? Will be interesting to see how they spin this.
Yeah, is Relay going to give you the option to pay off your card balance from a Chase bank account or from, have it set on auto pay? That's a great question because, Relay, there's no hiding it. Like, you can't do bill pay unless you have your bank accounts with them. They make money on holding your money. You can't do receipt capture unless you bank with them. Interesting, though, is like credit card is its own money-making business.
Yeah.
So I would speculate maybe they would want to, but at the same time, like, if you want to get in there for credit cards, my guess is they're going to say, great, like apply. And by the way, it comes with one bank account automatically standards. If you put no money in there, great. I don't know. The one thing I will say is looking at the application to get in on the beta, they are only giving it to businesses right now that have been in establishment for over a year, and they're doing over a certain amount of gross receipts. So none of our clients that want to sign up, well, I guess they could sign up tomorrow as long as they've been around for over a year. But like, you're not going to, sign a new business that started last week and be able to get them on the beta of this program.
Interesting. Yeah, that'll be cool to see where they take that.
Question 3. You're sitting 2 for 2. Well done, sir. Question 3. Wrangler is the newest product being released next month by the same company that brought me my much beloved tool, Accruer. What is the name of that company? Which, by the way, Jeremy, Accruer was an app snack.
Oh, I am not going to know. First, I went to jeans, right? As soon as you said Wrangler, put on my farm jeans. I don't even want to venture a guess on this one. I'm going to be way off.
That would be FinOptimal. FinOptimal, they have released the tool Accruer first and foremost, and then they sneakily released a tool called Booker back in February, which is essentially a Google Sheets integration that automatically, with its API connection, has a journal entry template where you can upload straight from Google Sheets directly to QuickBooks. It's almost like Spreadsheet Sync that QuickBooks, bought Data Deer, rebranded as Spreadsheet Sync, broke it, and then just said, hey, everyone, we're going to charge you $80 for this. Well, they built their own solution that works with this, and now they're releasing Wrangler, which is its own reporting tool. Basically the same thing a lot of these other companies, LiveFlow, Data Rails, that can get everything out of QuickBooks in the API. But the thought behind this is, if you have one single company, FinOptimal, that can pull the reports of the transaction detail in a workbook, syncs right back over to the journal entry creator that is Booker, and it uses Accruer to automate the accruals over any period of time. So you could create a template that automatically refreshes, pulls data, trues up, posts, and does the lifetime accruals automatically. Like, I don't think I was actually ever going to use Booker because I use Right Tools, just copy and paste journal entry, but this could be pretty cool to play with, especially if you're pretty techie and starting up a new firm. You might be able to build some automations here to really save time.
I feel like watching you look through that you peed a little or something. Like, oh man, this is going to be awesome. Yeah, that's cool. Like, I got more things you can get in one place to do all of the functions that you want to do more efficient, faster, all of that. That's a great thing.
And the thing that gets me is, we have a couple of clients, we pay for QuickBooks Advanced so that we can use Spreadsheet Sync and upload really large pages of journal entries. But it's like Booker's only going to be $15 or whatever. I shouldn't speak out of turn. I don't have the price in front of me. But that's much cheaper than upgrading to QuickBooks Advanced if you can get the reporting pulled and then repost entries automatically calculating in a spreadsheet. Hot dang.
Yeah.
Question 4, Jeremy. Everyone's favorite evil empire, Intuit, announced a change to its name for QuickBooks Live Assisted Bookkeeping Service to what?
Is it like expert support or something? Ugh.
I'll give it to you. It is QuickBooks Live Expert Assisted. Now, this one has people not even getting their panties in a bunch, just burning them, on pitchforks. Some people are really upset because QuickBooks has announced they're rebranding the name of Bookkeeping Live to Experts Assisted, and this is now going to be a tab on the left navigation menu for every client, not just the ones without accountants. So even accountant clients will see the experts as an option, and your clients will have the ability to pay a fee to have expert access to those experts. They did a webinar this last week, and the comment section got pretty spicy with people that were angry at Intuit. I'm curious, before I give my very opinionated thought on this, have you heard much about this, and what's your initial reaction?
No, I have not. I think they had they changed something on one of our clients already. I saw on there and it was like, what is this? I don't know. Especially if they're engaged with an accountant already, this is concerning, right? Because they're going to be like, well, Jeremy didn't get back to me today and I really want this updated. I'm just going to go to this expert person and they can talk me through it and it's going to be fine because they're an expert. Whereas unless you live the books for a few months, we all know you are not an expert in that. So that to me is concerning overall. So I guess it depends too as long as you have clients that aren't going to go off the rails and use it, I'm not overly concerned, but I'm still a little concerned.
So I have a lot of opinions on this, and allow me to jump into a couple of them. But first and foremost, they're abandoning the name bookkeeping. Now, you can view this one of two ways. A lot of the people that got very angry in the comment section, they view this as QuickBooks trying to cut us out us accountants, steal our clients, and get them all to live bookkeeping. But instead, they're backing off the name bookkeeping and advertising a service that is product support. They're saying, hey, we'll help them, but we won't do anything. We will only help walk them through, hold their hand through how to post a transaction, how to create an invoice, how to reconcile an account. But we're not going to do any of it. To me, and QuickBooks has not said this is me reading between the lines, it almost seems like they're throwing in the towel on building a bookkeeping live service and instead beefing up customer support for the product and then trying to push the accounting work off to all of us. And both things can't be true, that either they're coming after us or they're trying to support the accountants and keep having us be their sales staff. I think they stand to make more money with us accountants as their sales staff trying to put clients on their platform, because why else are they putting all the money into QuickBooks Connect every year and giving a venue for their customers, which is only accountants, to connect with vendors who are their competition, right? Because they're trying, like, Intuit's trying to build out its own task management side, but Keeper's doing that, Carbon's doing that, Canopy's doing that, Lissio's doing that. They're creating the marketplace for all of us to talk behind their backs and work around them. Like, both things can't be true, that they're coming after us, but also trying to support us. I feel like, yes, this could get sloppy if your client reaches out to a quote unquote expert and they try going to recreate the books themselves. But I'd also imagine if the expert is smart enough, they're going to say, hey, you can do this, but if you have accounting technical questions, you should reach out to your accountant or get connected with one, which, by the way, we have a profile library of all the ones we recommend. I don't know. I think this is QuickBooks throwing in the towel, not throwing in the towel, but lessening their stance on trying to build live bookkeeping and more, all right, how do we just make our customers happy and get them to work with accountants?
That's probably a good thing, right? Like, we've seen some QuickBooks Live books come in and they are dicey, awful. I'm sure there's a few good ones out there too, but I have not seen them. But also, is this included in their monthly subscription, or is this like if you push it, they're going to get you a bill too with it?
It is an extra fee to turn on access to live experts. And I think the one thing that I've gleaned from this is, like, every time you connect with the expert, it's not the same person that you worked with last time. You and I know this. To get good books, you need someone who's, for lack of a better term, intimately knowledgeable about that set of books. So if a new bookkeeper's coming in every month and making changes, they're not going to be good. And that's where I think QuickBooks Live has struggled, is having consistency for all their clients over and over. So the live experts are just going to help really be product support, is what it seems.
Yeah, I agree. I mean, we'll obviously have to see which way this goes, but I can't say I'm a fan on the surface.
I'm not a fan of it either, but I don't think we have to be worried. That's my opinion. All right, one more question. I know we spent a lot of time on that. Speaking of Intuit, Intuit has announced that accountants will soon be able to connect to which low-priced product?
QuickBooks time? I don't know.
I don't know if you remember this, but a few months ago, we introduced QuickBooks Solopreneur. At the same time they were releasing Ledger, they were releasing Solopreneur, but accountants wouldn't have access to it. And this was a whole, again, everyone's like, oh, they're releasing a version that cuts us accountants out that people can get signed up on. Either you have to look at this two ways. Are they getting us accountants back in there and they're throwing in the towel on live bookkeeping? Or was this just sales and marketing said, hey, we got a new product, and they didn't wait for tech to say, yeah, we can make that integrate with everyone else? You know, usually we all think it's malicious. I think it's just sales departments like, here's where we can get more money. And tech's like, yeah, we can't support that right now. Whatever, we'll just move ahead. I don't know. I'm purely speculating, but all of this points to accountants are still a big part of their strategy going forward.
Yeah, it's like a skewed product development path, right? Where they're going to have that all done, but like, oh, wait, this is ready, but it's not. Let's put it out there anyway and see if we can start making money. Woo!
Exactly. Jeremy, 3 out of 5. Right on brand.
Solid.
And with that sound, it is halftime, the part of the show where we head over to the benches and get a big old bite of an app snack. And Jeremy, today we are talking about Fathom.video. Not to be confused with all the other Fathoms. Have you played with this tool?
A little bit. Like, my team uses it. I have not, but I have thoughts and I asked for some opinions, so I'm ready to jam.
All right, hit me.
Yeah, so like if you don't know Fathom, right, it's more or less like a tool that sits on top of your Zoom software. Also, I heard it works with Teams and Google Hangouts, I believe, as well, right, where it sits on top of it and it records the meeting and then also pulls together a transcript of the conversation that was had that's also searchable, and there's timestamps and all the things, and then pulls in our dose of our favorite flavor AI to try to segment it, put up follow-up terms, and all of those things in order to better get you in the moment of the meeting, knowing that everything's going to be recorded and you can access the content, either the video or text afterwards.
That's exactly it. I mean, if you've played with any of its competitors, Gong, Fireflies.ai, or Chorus.ai, all these tools sit on top of your meetings and take notes. And the thing that I absolutely love about it is if you download the desktop version, you have a little icon on the right side of your screen while you're in the meeting. And if someone brings up something interesting, you can hit the highlight button and it'll start recording specifically, like it's recording the whole meeting, but it'll start keeping that section and pay attention until that person stops speaking, and then it will summarize it, like Jeremy's favorite food is canned peaches, or that he likes to vacation in Sheboygan, Wisconsin. I don't know, but it will keep those notes and like summarize them at the end. You can also hit the button for to-dos or pain points or whatever you want to label each one. So then it will start to summarize those, and you leave the meeting with stuff to add to your CRM, stuff to make sure you overcome, task for follow-up. And Jeremy, my favorite part about this software, the intro version is free $99 forever. It's a great price.
Yeah, absolutely. And that's what we have. So I have a couple team members that really like this. I have honestly not used it myself, but I asked them for their feedback on it and got the same thing. And I love how you said you can think of like Jeremy's favorite food being canned peaches. Is that a butt reference? I'm going to leave that alone. But like, you could highlight that on a sales call and then just have that in your notes and saying like, hey, next time it's their anniversary, we could send them their favorite thing, or they live in Denver and we can give them Denver Nuggets gears or whatever, right? So that part is cool.
The other beautiful part, so on the free version, after the call, you can even get a link that, first it'll email you a summary. You can push a button and it'll send the summary to them as well, and it'll let them have access to the recording if they want it. But you can also copy that link. We put it in our CRM. So automatically, I hired a salesperson this week, Jeremy. She started on Monday. She's looking to take sales off my plate, and she has a library of the last year now to go back and listen to all the sales calls. See when I did well, see when I did poorly, see when we signed a client despite me doing poorly. Like, she has this entire library at her fingertips. And they have a Zapier integration. So if you do pay for the team version, you can set it up like you and I use Keep Full, a version of Go High Level. You can set it up to where the moment the recording ends, it triggers in Zapier, takes the link, uploads it to their profile along with any notes. And now in your CRM, you already have that recording saved there. You're off to the races. Like, there's some great implications here, whether you use the free or paid version.
Yeah. Do you know what the pricing is for the paid version?
Yeah. So price goes in a couple things. As with all these companies, they want you to sign up for an annual contract. So if you sign up for their standard program, that is $24 a month if you pay annually, or $32 a month if you pay month by month. And then, they have their pro version as well, which really gets into all the beefy stuff, Zapier integrations, a lot more security as well, CRM syncs. And that gets up from anywhere from $30 a month to $40 a month, depending if you pay monthly or annually. But as I said, the free version, also quite lovely.
Yeah. Is that per user, do you know, or is that like firm-wise?
That's per user. So it's,
okay.
When you start paying for those integrations and tools, you're paying for it. But my thing is, if someone's starting out right now and they just want a tool for prospecting clients and taking notes mid-meeting, give it a shot. Like, you are not going to regret it.
A couple of just like not even terrible criticisms, right? Is that like, if you have this and you weren't in the meeting and you send a link to it, you send a link to somebody, the owner of the video has to approve it, right? Which is a little bit, I don't want to say frustrating, but a little bit of work, right? But that's good controls, right?
Yep.
That you have this and somebody approves that. The other one is I've been there where I wanted to watch the video and it has been shared with me and approved. And it like takes me to their portal or whatever to sign up for things, like try to open my account and sell me versus just showing me the video that we've kind of purchased anyway. So it's just a little weird, but like super small hurdles to get over and definitely doesn't take away from the tool overall.
Well, whenever a product's free, you got to remember then, Jeremy, you're the product somehow. So they're trying to sell to you if you're using the free version.
Yeah. Oh, absolutely. All right. Cool. Thank you. So let's move on to the next one. So this one's going to be short and sweet. So Tyler, big 3 financial statements. Hit me. What are they?
Well, profit and loss, unless you're a snob and say it's the income statement. And then it's the balance sheet and the statement of cash loss for you and I, because it doesn't flow.
Yeah, there is no flow for us in dance moves and cash and any of the things. But do you know, but wait, there's more.
Ooh.
There's a 4th standard report in the listing of reports that's out there, but you almost never see it unless it's a fully audited statement. Care to venture the guess of that one?
I mean, it's probably not the AP or AR ledger, which is what I would want to see. Is it?
Yeah.
I see many software always include executive summary in the base reports. Is there like a requirement for an executive summary?
No. So, and this to me is a little bit overkill, but the statement of retained earnings will be a called out statement in audited financials, right? And so statement of retained earnings really just showing the changes in a business equity account over the course of time, right? And which is all important, right? How much is the company worth and all of that. So I have a few accounts. I'm going to shoot at you rapid fire and tell me if they will be included on the statement of retained earnings.
This is going to be so embarrassing with how long I've done accounting, but I've never done corporate like audit financials. You all are going to see how dumb I am. Let's do it.
Oh, no. You're going to be good. All right, ready. Goodwill.
No.
Dividends.
Yes.
Investments.
No.
Net income.
Yes. Feeling good.
Gain from asset disposal.
Gain from asset disposal should have been netted through the income statement as either gain or loss. I would say no.
Foreign currency exchange.
That should be part of net income still. I'm going to say no.
Prior period adjustments.
Oh, snap. I'm going to go yes, but I'm not confident.
Tyler's 30 bank accounts.
No.
Nice work, man. That was like 8 for 8. We don't do that around here.
Nope. I am retiring. Everyone, they said get to 23 episodes of Unaccountable and go out on top. Blake, we heard you loud and clear.
Yeah, that's right. But yeah, just to back up a little bit. So what we're trying to do here with the statement of retained earnings is see the value and equity of the organization, right?
Makes sense.
So the general flow is beginning retained earnings plus whatever net income you have minus any dividends, and then get to ending retained earnings. The one wild card I threw in there, which you handled brilliantly, prior period adjustments.
Yeah.
So this would come into play. You care to give an example of where you may have a prior period adjustment?
Well, this is when you get someone's bank account and, you know, the tax returns have already been filed. You get their whole financials and something on the balance sheet doesn't reconcile. And there was a big error made. And this is where, Jeremy, maybe you know better than me because what's material, what's not, what needs a restatement for prior periods versus an adjustment where you don't want to throw off the income and the profit and loss because it's just going to skew the financials, but you still need to account for it somewhere. If it's not material and requires a restatement, but you still need to adjust for it, you throw it into the adjustment and it has to balance out in equity.
Yeah, absolutely. And this is something where anytime there is one of those, you will get like at least a full page explanation of why this happened, right? Another one that you'll see pretty often is if they change from inventory methods from LIFO to FIFO and that like how that changed the beginning of their books. So that's another one that would be out there.
Or cash to accrual.
Yeah, exactly, right? So it's just where we can put information on things that happened, changes that have been made, shove it into equity, and make sure you explain why.
Brilliant question, though. Well done, sir.
Yeah, nice work.
Thank you. I mean, really, you were just asking me what are equity accounts. That's all I was answering.
I didn't want to make it that clear to you, though, because that would have made it easier, but I can't stump you, man.
I understood the assignment.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
Jeremy,
Yeah.
have we done
Yes,
this
Tyler.
before?
Done the seductive dance that
No.
we're currently...
No. Fast Figures, because this feels like deja vu. At least this round will, because every answer you are about to give, I have said the answer at some point during this episode so far, or by the time you are to answer the question.
Oh man, this isn't fair. This is like, why don't you already had like tax for Jeremys instead of dummies in here? Now like you have all the answers at some point. If you get this wrong right after I batted 1,000,
Yep.
that's gonna look very bad for you, Jeremy. Awesome.
Yep. Now, I have zero sympathy for you on this because you've given me some hard ones. Every answer has been said so far.
All right.
All right. Putting a minute on the clock, and here we go. Within 5,000, despite a moratorium since December on processing new claims for the pandemic-era ERC, the IRS still averages how many new applications every week?
20,000.
If a nonprofit sells souvenirs in its gift shop in the state where the sales tax rate is 7%, what sales tax rate should the nonprofit charge to its customer?
Oh, that one's loaded. It depends. 0.
The 2024 NFL draft just wrapped up, and the most quarterbacks were taken in the first 12 picks ever. How many QBs were taken in those first 12 picks?
Oh, it's 5 or 6. 6.
How many sides does a dodecagon have?
100?
For bookkeeping for lawyers, what percentage of the interest earned on an IOLTA account does a lawyer get to keep? And yes, we will explain IOLTA later.
3%.
In the 1994 classic rendition of Little Rascals, when the boys go to open a bank account, what is their made-up account number?
69.
The most common fiscal year... Jeremy, you've heard all these answers in this episode. The most common fiscal year, aside from the calendar year, starts in which summer month number?
7.
What popular musical comedy debuting in 2017 recounts the differing levels of suffering of Henry VIII's wives?
Oh, man. I know. Like the 12 ladies or something. 12.
As mentioned in our app snack, how much does the base version of Fathom cost?
$24.
All right, let's run through it, Jeremy. First off,
Man.
within 5,000, despite a moratorium since September, how many employee retention credits is the IRS getting every single week? According to our new friend, Daniel Werfel, you said 20,000? Well done, sir. Yes, earlier in the episode, I said it's not like some low number like 20,000. So I've already dropped that answer. If a nonprofit sells souvenir in its gift shop in a state where sales tax rate is 7%, what sales tax rate should the nonprofit charge to the customer? You said 3%. Nope, the answer was in the question. It was 7%. If a nonprofit sells souvenirs in its gift shop in the state where the sales tax rate is 7%, if you are selling non-necessities in most states that have a sales tax rate, even nonprofits charge sales tax and remit it to the state, which is where a lot of nonprofits get in trouble. And I know you know this, but it's Fast Figures, man. It just gets you.
First of all, you are diabolical. Can I just put that out there for a record of sneaking all this crap in here? Esquivia. And secondly, like, there are some situations where you would not pay sales tax on it, but like the way you explained it, you're absolutely correct.
Jeremy's so right. It does depend. Because you need to go to every single state. TaxJar has a great article, which I'm referencing here, and some states don't have sales tax. And some of them, like certain, like clothing may not be taxed in that state. Yeah. But souvenirs are almost always taxed in every state. Well done, sir. I'll give you half.
Yeah. All right, I'll take that.
Just for fun, the 2024 NFL draft just wrapped up, and the most quarterbacks taken in the first 12 picks. How many quarterbacks were taken in those 12 picks? You said 6? By the way, I wasn't sure we'd make it past 6. Well done. Way to know your stuff, man. Look at you. How many sides does a dodecagon have? You said 100. The answer is 12. Because I said the 2024 NFL draft just wrapped up, And the most quarterbacks were taken in the first 12 picks ever.
Sorry,
Sorry,
the deck in there makes me think it's a 1 something, right?
Yeah,
Oh,
dodecagon 12. For bookkeeping for lawyers, what percentage of the IOLTA account, which the IOLTA is an interest on lawyer trust account. So if a lawyer is holding money in trust for some sort of dispute or something else, those accounts still carry interest, but the lawyer cannot collect or keep a cent of it. In fact, they can get disbarred for doing that, which is why bookkeeping for lawyers is such a big deal, because you need to make sure you can reconcile every penny and show that any interest went back to the State Bar Association. So your answer of 3, not quite correct. Now, I have zero sympathy for you on this because you've given me some hard ones. Every answer has been said so far.
Wait, but like, let's say they have, like, a smart lawyer is going to put this in an account to gain interest or have interest-bearing accounts. Do they need to give that to the person they're holding the funds for, any interest collected on it, or do you have to have it in a non-interest-bearing account?
No, you can have it in an interest-bearing account. They actually make specific IOLTA accounts where they will actually even auto-remit the interest to the state. But the lawyer can't keep it. They can't distribute it. It all goes to the state bar when they hold that money in trust.
Oh, and the state bar uses those funds to make more lawyers? This sounds like a Ponzi scheme or something.
You know, unless Brandy Derrick wants to get on here and tell me where I'm wrong, or Jaime Rodriguez, you know, I'm sure there are nuances and things I don't know further deeper down this, but the IOLTA account, it's a big thing to know. Lawyers get in a lot of trouble if you get this wrong. So if anyone here ever entertains taking on a lawyer, study up on IOLTAs first. The 1994 classic rendition of Little Rascals, when the boys go in to open a bank account, which, by the way, the banker is Mel Brooks, Blazing Saddles, Robin Hood Men in Tights. Mel Brooks. What is their made-up account number? You, on very brand for Jeremy, said 69.
What is your account number?
7.
7. 7.
Try 8.
The answer is 7. If a nonprofit sells souvenirs in its gift shop in the state where the sales tax rate is 7%, sorry, sir, what is the most common fiscal year aside from a calendar year? You said 7. Well done. We're going back to it. The sales tax rate is 7%. And Jeremy, I want to bring up the fiscal years because a lot of new bookkeepers and accountants don't understand why you would even want to have a fiscal year that's not a calendar year. Can you give an example of why someone may want to do that?
Yeah, I can give a couple. Like, one is, so most of the firms that change them, a lot of them go through audits, right? And like trying to get an auditor to come in and do your statements in January, February is just hard and typically more expensive too. If you move that and say like, hey, no, we're mid-year. Oh, great. We have more resources than you could have paid this. And now it's this, right? That's one of the big reasons that we see out there.
Also, you'll see a lot of like retailers. They don't want their year end to be right during their Christmas crush. They want to push it to January. A lot of schools, even public school facilities or universities, they want it to be during the summer, not during their main money-making parts of the year. I used to work for Vail Resorts, the largest ski resort company in the U.S. Not only was our fiscal year, we didn't want to have it, right over Christmas holiday, like when we have most skiers ever. They didn't even want it during the winter season. So you'd think, oh, move it to a July start. But they didn't even want their quarter end to be around Christmas. So they pushed it back even a month from July and started in August so that your quarter end was on January, but your year end was still in the summer. There's a great reason to move it sometimes to really make life easier on you, not just make your seasons that are already hell even worse.
Yeah, I have like nonprofits, the same thing. They're trying to get all their money in development stuff during the end of the year. So that's why they will move theirs. But I just like part of that when you don't have the quarters actually being quarters kills me a little bit inside. That's rough.
It's tough, but you can see why Vail does that. Oh, yeah. It makes sense.
Yeah, absolutely.
2 more questions, Jeremy. What popular musical comedy debuting in 2017 recounts the differing levels of suffering by Henry VIII's wives? You said 12. The answer 6, which was also the answer to how many NFL draft picks there were, and we mentioned it earlier in the episode. By the way, I wasn't sure we'd make it past 6.
Dang it.
Well, one more question. As mentioned in our app Smack, how much does the base version of Fathom cost? You said 24. I was actually looking for 0. That's the one I referenced, which also I said, now, I have zero sympathy for you on this because you've given me some hard ones. Every answer has been said so far. But 24 is actually the base paid price. So let's give it to him, folks.
All right.
And we did reference that earlier. Jeremy, when it comes to Déjà Vu, 4 out of 6. I'm proud of you.
Wait, I had a half in there. I feel like, but like 1.5 of those points were pity points. So like, let's just go with what your number is there. It's pretty good.
We'll take it. Proud of
Yeah.
you, sir. Jeremy, it's time for our winner of the week. And before I ask you a question, I do want to say, did you see the results of the direct file program for the IRS?
No, I haven't seen anything about that recently.
So they released that 140,000 people did the free file program in the 12 states that were eligible for the program. 12, we referenced that already too. But out of those 12 states, it cost them around $2.5 million for those 140,000 returns, which David Leary clearly pointed out, this is $17 a tax return, which, Jeremy, a government program that not only costs only $17 a tax return, but 90% of respondents said it was an excellent experience. I'm going to say the IRS winner of the week for actually doing something that looks like it could hold merit going forward.
Wow. Yeah, that is impressive. Like anything where you get like general people involved with perceived pain point, accounting, tax filing, whatever, and you get a 90% satisfaction rate.
On $17 a return?
Yeah, that's impressive.
But Jeremy, that's not our only winner. Like the Van Grohl also had a big win.
Yeah, let me take off the rails a little bit. My son was at national gymnastics called Westerns because they do half the country, Easterns and Westerns. Medaled in 4 events, got 9th in all around. Just super proud of my little Alan. So I want to put him as a winner of the week too.
I love it. And for our loser?
Yeah, so why wouldn't I go off the rails again? Saw this come across Yahoo Finance that Guaranteed Rates, the second largest retail mortgage lender, one of their members received an award on the coveted, the Rising Stars in Real Estate and Mortgage. His name is William or Bill Loser. So congrats to you, Mr. Loser, for winning this fantastic award. So there are no losers today, just winners.
So our loser's a winner or our winner is loser?
I think second one, but I think we go both ways on that one.
You do. I know you go both ways. Well, Jeremy, that's all the time we got for this week. Everyone, thank you so much for joining us. Hop into that Earmark app if you want to get some CPE for your CPA license. Leave us a review on Google or join the Facebook group so you can mock how I'm the worst thing to come out of 1987. Either way, until next week, have a good one, Jeremy.
You too, and think twice before starting a podcast.